Good day and welcome to this edition of the Royal LePage Binder Market Report. My name is Dominic Papa. As we dig into the fall season, a lot still happening in the real estate world. And of course, we're so very pleased to always talk about the man that really knows this stuff inside out. He's incredible. I love doing this show because I learn something every time I get to do it with the legendary Frank Binder, who joins us today. Good day to you, Mr. Binder, and again, great to see you.
Good afternoon. Good to talk to you there, Don.
Yeah, and before we came on air here, we chatted a bit, and I mentioned to you that this D word keeps coming up: declining, decrease, and I know it was inevitable. And the good thing is, and you're going to explain to our viewers that it's not all gloom and doom. There's still some good signs here, which is great to know. And I think a lot of people are just kind of still trying to figure out where this is all going to go. And that's why we talk to you, Mr. Binder, because you give us that good direction that we need. So,
absolutely. Yeah.
So let's get right into it right away. We're going to talk numbers as we do a lot on this program. Residential listings. And right away off the top, we'll say, I'll let our producer Evan get the charts up here for us. There it is. It's declining right now as of September. Go ahead, sir.
And that's good. I mean, what we're seeing is, if you remember, we've been talking about an increase in inventory over the months, and to have a decline as we're, and the decline actually started back in June, as you can see the graph. Mm-hmm. It's been declining steadily, which means that we have a little less inventory. That stabilizes the market as you know, because we're not oversupplied. We in fact were oversupplied coming into June and July, and then the following months we've dropped. So this is a trend, no question. It's a trend, a continuing trend. I think what's happened is that a lot of the people who were trying to get a price for their home, where it was price driven, their intention was to try to get as much money as we could for the house. Those folks are withdrawing from the market now. They're realizing they're going to get less money for their house, and so they're not putting their houses up for sale. But you can see that the 885 is a little bit down from 1,057. That's about a 14. It's a first time actually that we've seen a 14.99, almost a 50% drop from one month to the next. And our total listing count for the that we have in inventory is just a little over 1,041 houses. So that's a good thing. It's much more stable market. It'll bring stability to the marketplace now because we're getting less people who are putting their houses up. And we want those who really want to sell their house or need to sell their house to be the ones that are actually putting it on the market. None of this checking it to see whether they can get the right price, and then when they discover they can't, they take it off the market. That's been going on for the last 2-3 months.
Do you expect this to continue the trend to continue that way, Mr. Binder, that it's going to decline even a little bit more, perhaps?
Yeah, you know what? I wouldn't be surprised by it at all. I mean, we are one of the very few places, the very few markets, Tom, if you go across the Ontario, and I talked to a lot of my colleagues across Ontario, that hasn't happened here. They didn't spike up in listings all of a sudden. They didn't see the spike. They had low inventory and have had low inventory throughout the entire year, even going to this point. So this is an anomaly for us in Windsor, where we had the sudden spike, but that's not across the board. And actually, we do want to have inventory. Don't get me wrong. Sure. I don't want to be undersupplied like some of those cities are. But the bottom line is that even in Toronto, they've had a drop in sales this month, and they're undersupplied. So you've got some problems going on there. This is actually not a bad problem to have, where we have good supply, and that's actually a better thing for buyers for sure.
Okay. All right. And I know we're going to get into some of the pricing and maybe how it affects it and things like that a little bit later in this show. I don't want to jump that far ahead because there's other things we need to talk about. And that's the next chart is the number of active listings at the end of this current month.
Yeah. And you see a bit of we keep talking about the decrease or slightly decreases. See it's moving down to 1,457 active residential listings in September.
Sure.
which is it's starting to it's just like I just said. We're finding out that the supply, the inventory that we start the month with, is being less and less, and that's actually good, because what you're also seeing, if you see the 785 decided, that's basically telling you about half of them, about 50% of them sold.
Okay.
And you're going to see that in our sales to list ratios. That's where it is. We were seeing 80%, so you can imagine where that would have been, and that obviously has dropped off as well. But the point of it is that we're still being oversupplied. We still have a greater amount. We have about 3.5 months worth of inventory, if you do the math on that. And that's not necessarily the best thing to have. Having a 2-month inventory, though, yeah, that's pretty normal. We'd like to see that. So just to let you know, getting to 3.5 is probably not the best thing, but 2 months is what we'd like to have. We'd like to have a good supply of properties for people to see.
In the current time right now of all of this information, you mentioned 50% sold, or maybe it went as high as 80% getting sold. What is generally a good number?
Listen, this is a balanced market. So between a 40 to 60% sales to list ratio is a balanced market.
Okay.
We like a balanced market as realtors. We don't want it to be on the side of the sellers or the buyers. Technically, it's the best thing for us to negotiate a sale between a buyer and a seller. So we like it when it's between 40 and 60%. And it's been a seller's market for a good couple of years now.
Mm-hmm.
And so the buyers have, just have to deal with it. But now they have more say about what they're trying to buy, right? And that's a good thing. And we also, as realtors, feel needed because we negotiate. We negotiate the buyer and the seller, between the buyer and seller. So it's a good thing for us. It's a good spot for us to be. And that's a really good, solid market. We're right in the middle of that, roughly about 51%. So that's a good market. Right now is a good market for us, believe it or not, even with the decrease.
Yeah, that sounds really good the way you've explained it then. Yeah. We'll continue to talk about sales. And I want to put up the next chart there, Mr. Binder. Number of residential sales in 2022. And again, a slight decline as we're expecting here. But
in the month of September, a slight uptick, actually.
Actually, an uptick.
You look at it, you had 393, which was duplicated for July and August, and now just a bit of an uptick, which means that we've kind of hit a plateau, and we're looking at an uptick. We'll see that in October, whether that actually comes out to fruition or not. But what we have seen is we're not seeing a decline. So you saw that decline in June, right away in July, and it kind of just stuck there. It's kind of like stuck. The needle's just stuck there for the time being, for the last 3 months. And so that to me shows a plateau. It basically is plateaued out, and we'll see whether there's an uptick or there's not an uptick going forward. So that's I don't want to make something out of a small increase. Only 10 houses. It's not really substantial, but the bottom line is that at least we plateaued. And we might consider that to be the bottom of the curve, so to speak.
Mm-hmm. Okay, so that's the number of residential sales in 2022. We're going to continue talking about sales percentages here with the next chart, Mr. Binder. It's the monthly residential sales percentage.
Yeah, and you can now you want to see a decrease. There you go.
Right I was going to say this one really took a nose.
Yeah, look at that graph, right? So I mean,
wow.
This is not prices, okay? We're getting people saying, there's a 40% drop in prices. That's not prices. This is in unit sales, right?
Okay.
So the unit sales have been on a decrease all the way, starting way back in March. You had an increase in February, and now you're seeing a decrease. And it was only for a while, then it really started plunging. And the last 3 months, it's been 40 plus. And that was no different in September. So the unit sales dropped. But remember what we're comparing to it. We're comparing it to last year's, and those numbers were way up last year. So to have a 40% drop this year, comparing it to last year, you're going to see numbers like that. And we can't get too caught up with a 40% drop from one year to the other. We had a pandemic year last year where numbers were crazy high, and now we're showing that compared to last year, you're going to have a drop for sure, because we're going to get into what we call a more regular market. We're returning to markets that were in 2019 pre-pandemic, okay, and that's what that means, right? simply, if you want to put it that way. We're back to 2019. We passed the pandemic, and we're getting back to those levels. Quite frankly, and that's what this illustrates actually.
So this is kind of normal then. Like, I mean, it doesn't look great when you look at a chart like this.
Yeah.
And you think, oh my God, what's happening here? But
The pre-pandemic was abnormal. Okay,
right.
It was abnormal. So what you're trying to do is compare what would be a normal market to an abnormal market.
Okay.
That's never good, right? So I mean, what we saw in the pandemic was stuff that we never saw before, and so I mean, I don't want to diminish it. There is definitely a 40% drop. 40+% drop, and it's evident in the numbers. But I'm not overly shocked by it. We should have expected to return to normal. Returning to normal meant a drop. Quite frankly, that's the way you put it.
Okay. And this is where we're going to get into some of the pricing now, and this is where I think, and you kind of alluded to it earlier in the program here, where it's not all bad news, especially for homes being sold under 550,000.
Yeah.
Maybe you can explain these two charts. There's the one chart of homes sold under 550,000. Of course, the other one is homes sold above 550,000, and that's where the change is, I think.
Yeah, you're right, and that's why we put the graphs up here side by side, top to bottom. We wanted to show the under 550 market. It's pretty regular. I mean, it's gone to a high, back in May, and then August was still very high. So if you look at the numbers, that's pretty much normal for that price bracket. And we're still seeing activity. And I want to tell you that we're still seeing some multiple offers on the houses that are under 550. There's no question about it. There's still multiple offers for that. And let's understand who are these folks. Well, many of these are first-time buyers. They don't have a house to sell. I don't have to worry about selling my house to buy the other house. It's not an equity trade. So those buyers basically can come out and buy the house. There's still good activity. Why? Because there's a lot of houses now. I got a lot of houses to pick from. So we're still seeing good activity. A bit of a drop from August to September, but well within the range that you see throughout all that graph of anything under 550. So I think that's why we've done this graph this way, just to show that market has been steady, pretty steady all the way through, in spite of all the drops that we talked about here. Where has the drops occurred? It occurred in the top end market. So look at what you've got there in the top end market. You basically have a basic big drop, and it's been following all the way down. But what's also happened between August and September? A bit of an uptick, a little bit of an uptick there, going from 130 down from a low of 132 homes to 160 homes. So are we getting back to normal there too a little bit? Yes, we're going to be starting to see that going back to normal. Our October numbers will either prove or not disprove that, but the bottom line, that's really, really important. And finally, the last point about this is not on the graph. We track the over $1 million properties that are being sold. And exactly this month, we had 15 houses sold over $1 million. It's exactly what it was last month, but it's way down for what we had during the pandemic. We reached levels of 60 and 70 houses that are over $1 million back in the pandemic. So that market has really kind of really dropped off. And that's why when we talk about that, you start seeing price drops, because that market has dropped off significantly.
But this has to be great news, Mr. Binder, for those first-time buyers, because let's face it, when the real estate market was just getting into bidding wars and houses were selling much more than anybody really anticipated, those first-time home buyers that were looking, a lot of times they couldn't match the prices or get into that price range. This is, I think, encouraging news for them, and something that might get them back into shopping for houses again.
And they should. The bottom line is, that's why we present these things, just to give a sense of what the numbers are. The numbers always prove out the market. And whether we like them or whether we don't, there's people that don't like graphs, and I totally understand that. I'm not a big fan of it myself, quite frankly. But the bottom line, it does show the market. So the bottom line from our buyers and our sellers, we need to prove out the market to them in everything that we do. And this is what this is all about. we're proving out the market. And basically, that what they're seeing now is they're seeing that we've kind of reached the bottom, and maybe there'll be slight upticks.
Mhm.
You're not going to see it's not going to shoot up, not at all. We also have to be very much aware that we're still in an inflation period of time. We've got people trying to recalculate their lives, basically, and so all of that's comes to the fro as well. We can't discount that. We also have to be very much aware that Bank of Canada might take another shot at increasing the rates, and so
Right.
if that happens, that can also affect our market going forward as well. So there are economics here that we have to keep in mind and pay attention to. But what I'm seeing is basically a bit of a leveling out, and you're going to see that in our next graph, particularly.
Yeah, let's get to that. Of course, it's the annual average sale price and also the monthly average sale price. So you could take us through this, Mr. Binder, explain exactly what this is telling us.
So we show both to you, and the reason why we show both to you is that you have to realize the graph on the upper graph is the annualized average. The annualized average takes a group of 12 months, and you annualize that, and you notice that is showing 637, 642 is the average price right now of all houses, calculated over a 12 months period of time. The monthly rate is one that shows trends. It really shows what's been happening during that. You notice that when you start seeing a drop, say for example, between April and May and June and so on and so forth, look at what the annualized rate is. You only had slight drops in that.
Right.
Okay? So because that's an aggregate of all the months as opposed to a month by month play out. Okay. Realtors look at that month to month thing much more closer than anybody else. And that's what we pay attention to it, because we want to look at trends. And so what you started to see there is that we started seeing a more almost like a free fall of prices. Yeah. But what happens in August to September? It kind of just stayed there. It's a little bit higher, actually. The average price actually slightly went up in the monthly trend. And that might be indicative that we've hit kind of the bottom, so to speak. However, don't think that the top line will just stay at 637. Exactly, it may drop a little bit more. Because why? Because most of the activity is on lower end market. The lower end market is below 637,000. So the lower end market has no effect on the average sale price. The upper end market has a much greater effect of the average sale price. And if that continues to be slow and sluggish, we could still see some further price drops, okay? So maybe not to the extent that we have, but certainly will be some, and we must be aware of that.
Speaking of price drops, Mr. Binder, let's just say some houses, it doesn't matter what price range, it could be instead of the prices going, let's face it, there were bidding wars going on for houses. Yeah. Correct. So the prices were just spiking upwards constantly.
Yes.
Is it different now with this trend here? Are prices having to maybe come down a little bit each time because maybe they're not selling as quickly, or just maybe that market's not out there now?
Yeah. Let me give you an example of that. Okay. So if you say, for example, you're trying to get a property sold and you price it at $399 and you're trying to get to $400, you're trying to get to $450, $500,000. Well, you might get 6 offers on that property. You might get 8 offers on that property, but you're not getting to the $100,000 over anymore. You're getting maybe $20,000, maybe $40,000 over. So we're not seeing that. We're not seeing that competition of price, or that type of thing working to the extent it used to, because buyers are being much more cautious about it. I'm not prepared to just pay anything anymore. I can't afford to do that because I'm paying more costs. My costs are higher. Sure. So I'm not playing around with numbers like I used to and being as competitive as I used to. And also we've lost some of the Toronto effect. We don't have people in Toronto and everywhere else selling their house for the top dollar. Listen, they've had a 40% drop in units there. I mean, so they're not sure they're going to get that value for their house. So they're not coming down here buying it, unconditionally, and so that's gone. All those affected our price. I mean, we talked about it was like an auction. It's not quite like that anymore. We are still getting, I can't tell you that we're not getting multiples. Of course, we're getting multiples, but the multiples aren't adding up to significant price increases over the list price, right? So, I mean, and that's what you start seeing now. You start seeing sellers are setting their expected value, especially if they're over the 550 mark. They're setting a value. This is what I expect to get for my house, and they're trying to get offers on that. You'll see more people pricing, using the pricing strategy of underpricing in the market in the lower end market, because I can still get 15. We've had 15 multiples of 15 people going after properties in the rare occasion, but they're not getting huge numbers that will amount to this type of market that we just came out of. That's not at all happening. So I think it's really important for us to realize that not to say that they're not over. Multiples can happen and do happen, but it's really it's gone to the lower end of the market.
Yeah. Well, let's. I mean, that whole period of where houses were in bidding wars, that was a very unique time period.
Yeah, it was.
So.
Yeah.
Okay, well let's go to the year-to-date sales ratio, and then of course the monthly sales list ratio, and you can explain.
So basically, this is the story that I want to make sure people see, is that your sales list ratio, where you start when you hit a high of 82 in February, you're now down to that 51.50, and it's really been around 51.50 for the last 3 months. So it's not dropped down below that, and that's your yearly average. This is an annualized rate, and if you go back down to the monthly averages, okay, where you had 81% in February, then you had a real decline, and we went all the way down to 30% in July. And what's happened since July? We've started climbing back up. 37%, we're up to 46%, which means that really we went into a buyer's market for a short period of time, and now we're climbing back up to more of the balanced market. We're above the balanced market numbers, and so we're seeing the market kind of calming down, if you will, where we're getting a reasonably decent sales to list ratios, and that's a good thing. What I'm saying, that this is a good news story for most people,
sure,
because now we're heading back into that balanced market territory, where basically we're getting a number of buyers for the houses. So what does this ratio mean? Basically, these ratios mean for every 100 houses, 50 of them sell. Okay, and the same thing with the monthly rate. So when you look at that, that's the way you should look at that number. And 50 of the 100 is selling. That's half. That's not bad. Mm-hmm. It certainly is not up to 80 like you saw at the very beginning of the year, but at least we're at a number that's, I think, showing some strength in the marketplace and some consistency in the marketplace. And that's what I've looked for. And I want really our audience to know that we're starting to get to be consistent, which is important for them in making decisions, right? Both the buyer and the seller, they need to look at this number and go, okay, that's what it's going to be for me going forward.
And this really, again, confirms what you were saying earlier in the program, Mr. Binder, that it's stabled off, and there's stability there now, which is not a bad thing. I mean, in any industry, really, you want stability, right? So
we want some regularity and consistency, so that it's very hard for us to predict markets at any time. But for us to see this is going to be a better thing for us to say that we have got stability, especially after we've gone through some changes. Obviously, look at the charts. We've gone through some changes over the last 5 months, and and my salespeople have looked at it and going, when's it going to end? So I mean, I'm happy to say maybe we've got closer to the end. Okay, so hopefully we don't have another round of it. But the bottom line is, we always got to look at the economics. The economics will kind of dictate that going forward.
And no doubt we'll talk about economics in future shows. So we'll leave that for another show.
Leave that for another show. I agree.
So we want to finish out though, and I think this is maybe a topic you really like.
We just add this one in. It really.
I like this though. Mr.
Yeah,
Mike,
everybody does. Yeah, it resonates with a lot of people. We keep it in there.
Absolutely.
Yeah. So basically, what you've got here is you're just showing the average sale price on a style of home versus the average price on that we've been giving you. And that's really important to people too. So if I'm buying a bungalow, kind of what am I going to have to pay? Two-story, what I have to pay, and so on and so forth. So these are really, really, really important graphs for people to look at that. If I'm going to look at a raised ranch for my family, what should I expect to have to pay? Those are the kinds of things that we're trying to show here to various different people. If you're selecting a certain type of house, and so on and so forth. It's important for people to know the 1.5 stories is the lower end of the scale, but it's really more the core city and that type of thing. Raised ranches, you're going out to neighborhoods and various different things like that. So, but the most popular ones are still the ranch and the bungalows. If you add those two together, that's basically what they've always been the strength of the market, and that's something for us to keep in mind. But it's just a good graph to show people what they cost, so to speak, if I'm looking for a certain type of home. And we think it's a great thing to just add it in for me just to describe another thing to you.
Well, sure, why not, right? Let's give the people as much information as we can give them, right?
Yeah, absolutely.
Within this chart, Mr. Binder, I don't see anything that says new homes built, houses that are being built. Is some of that included in this, or is that an entirely different thing? And what does that area look like?
There could be some of that, but it wouldn't be a whole lot, right?
Okay.
So, I mean, new houses are really an entity unto its own. We've really never analyzed that. Most of this are existing homes, and they would make up the majority of the sales. They might have some new homes in it, but the bottom line is by far the majority of these things are MLS existing homes, and that's what you're seeing there. We don't really take anything out of it. It's kind of mixed in that sense of the word, but the bottom line is that it doesn't have a huge presence on it. A lot of the new homes are sold and they're not on MLS. You might get one that would be on MLS, but the rest of the subdivision may not be there. And so that happens in the new house market. You won't have a good sampling of that on our MLS system, unfortunately. So that's basically what happens. Not every house is listed on MLS that is a new house for sale. Okay, I can certainly tell you that a lot of the 2 stories that are going up there, I live in LaSalle, and I can tell you there's 15, 16 of those going up right now. Those were probably pre-sold.
Right.
And they never did hit the MLS market at all.
All right. I'm just curious if I can kind of change topics here, and I feel comfortable doing this to you, throwing a curveball at you, because I know you can hit anything when it comes to real estate. So I'll throw it out there. We had the time period where bidding wars on the homes were taking place. There were a lot of buyers from outside of our Windsor Essex County area. Did anything happen in the industry, Mr. Binder, that wasn't there before, and now it's going to be part of this in the future for good? Did anything change in the industry because of everything that took place?
I'll tell you what's changing in the industry is basically migration. We're not seeing migration as much now. Okay. We listen, what did the pandemic do? Basically says I can move from here to another spot and I can work from there. That was going on during the pandemic. That was really just for the pandemic. Now everybody wants them to come back to work, and very often they want them to come back to work where they are, not where they moved to. So now you have quite the opposite effect, where people are having to reconsider that. Wait a minute, if I move from Toronto and I move to, say, for Kitchener or London, now I have to go back to Toronto for meetings from time to time. So that really that migration, which was caused by the pandemic, that's gone away. It's not here anymore. Maybe on a minor basis, but very, very small. So we shouldn't see that anymore. And a lot of people call it the Toronto effect. They call it whatever you want to call it, but that could be migration from anywhere, really. The bottom line is that we're seeing less and less of that, and that has calmed the markets a great deal, because for all intents and purposes, our pandemic is over, really, at this point in time in the minds of many. They're not making those decisions. If they're still making those decisions, they're probably the last of the lot that have done that. And so that's basically it. Now what we're going to do is we're going to get migration to this city for all the right reasons, in the sense that I'm coming here to work. I'm getting jobs. I'm coming here to do these things. You know, you've got all the economics, like the EV plant and all these things being done. You know, this is going to be you know, the reasons for job hunters to come to our market and to relocate here on that basis, but not migration. Okay, the migration is basically over. Okay, hopefully I've answered that question.
Well, you hit it out of the park again, Mr. Binder. You must be in that baseball playoff mode like we have going on right now. That's for sure. So it's all good.
All right.
As always, this has been an education, and a good one. We certainly appreciate your expertise and sharing your knowledge with us. And I will look forward to talking to you again in about a month's time, and we'll dig deeper into the fall stuff, start setting up for the winter, and we'll learn more about the real estate world thanks to you. So.
We thank you very much, Don, for bringing this out. We appreciate it.
Yeah, no problem.
You
By
take
the way,
care.
you had some turkey this week, I hope, right?
Oh, for sure. Yesterday.
All right.
2 days ago, rather. 2 days ago.
All right. Good stuff. Happy belated Thanksgiving.
Yeah, happy Thanksgiving to you, my friend.
All right, good stuff.
All
That's this edition of the Royal LePage Binder Market Report. Hope you enjoyed it. Again, check us out in about a month's time, and Mr. Binder will be back with us, giving us more great knowledge in the industry, and hopefully giving you some direction as to where you need to be putting all your thoughts and your hard-earned dollars into real estate. Don't forget to check out all of the Royal LePage Binder social media pages. There's great information there as well. And if you have any questions, one of their agents are more than happy to answer any questions or concerns you may have about the real estate world. So that's it. Until next time, this is Dominic Papa wishing you a great day. Thanks for tuning in. We'll talk again soon.